Good evening. This is the video newsletter for Buy Sell Short for Tuesday, August 9th. And, what a crazy session today. If you didn't know that the robot trading programs were involved in this market and you were looking at the market the last 2 days, you need your head checked because it was robots on crack over the last 2 days, especially today. We had the Fed meeting. If you weren't watching, actually, let's pull up. We're looking at the 15-minute chart on the Dow, but let's just look at the one-day chart. Here is the Fed meeting. We had the Fed come out, and they made a pretty big statement. They said that they're going to keep interest rates. They actually set a date. They're not going to be even considering raising interest rates until 2013, 2 years away. Huge development. First time the Fed has ever done that. And what that ends up doing is capping long-term interest rates, and that is considered a bullish thing. We had an initial spike on that report, and then the robots hit. The market ended up, if you blinked your eye, you didn't see how fast it dropped. You ended up just dropping 300 points for all intents and purposes. They were able to drop us down minus 195 points. And then the robots, someone must have flipped the switch, and off they went on a buying spree. And, over the next hour or so, we rallied 430 points, or 630 points from the low to end up 429 points on the day. Just crazy, crazy action. I mean, we had the Dow moving 30 and 40 points on one tick. Just robots fighting robots. And, that's been the theme over the last few days. If we look at the daily chart, it goes without saying that we have been washed out and oversold big time over the last few days, but fear and panic have been prevalent, and when that happens, reasons sometimes leave. But a very, very nice bottoming action on the market today. But, and there's always a but, to confirm this, what we really need to see is a move out of the short-term treasuries, and more importantly, I think, in my opinion, a tank in the price of gold. Gold has been up insanely over the last 3 or 4 days, up $100+ an ounce just over the last day. We need to see the steam come out of gold prices, and if we see that, then we can feel a little bit confident about calling a near-term bottom in this market. As you can see, looking at the Dow daily chart, ridiculous drop. We're down 1,100 points over the last 2 weeks. You can see all the moving averages way higher, especially the 20-day exponential. That is at 11,940. So on our bounce, we'd be at least looking for a move back to the 8-day moving average. That is at 11,600, and then up there at the 11,900 area. Now back to this other longer-term view you can see on the Dow chart. We got all the way back, and look where we bottomed out today. Right where we pretty much topped out back this time last year before the market started going on its big move. Volume huge today, $2 billion or 2 billion shares on the NYSE. So we've got a high volume reversal across the major indices. We're deeply oversold. The VIX spiked into the 40s, almost touched 50 yesterday, which is exactly what we want to see. As I mentioned in the video on the weekend, that is what we need to see. The VIX level spike up real high. It usually ends up happening towards the end of a retrace in the market. The market down 16, 17% over the last 2 weeks. That's within the range of a bull market retrace. So now let's see what happens over the next few days. SMH, again, huge moves in the SMH today after the initial Fed sell-off. This one got down as low as 27.57 before it did its $1.50 rally back up to the 29s. As I mentioned, we're in this half to three-quarter position right now. Our targets are a move back to that 8-day moving average and 20-day exponential. So 30, 50 to 31 plus is what we're looking on the SMH right now. All indications are that we're bottomed, but we're not going out gangbusters just yet. We've seen some nice action in a lot of stocks. We're starting to see biotech stocks that have been decimated over the last week or so, giving some very nice bounces, just like we saw last year. So we're going to adopt the same plan we've adopted. It's worked so far. for us over the last month. Now we're going to go into stage 2 of our strategy after market tanks and start to move in and pick up partial positions on a lot of these beaten down stocks. And then once we start to see more and more of them start to tear, we can hold on a little bit longer. But, the theme right now is bottomed out stocks, small gains over and over and over again. Some of those plays we jumped into today, HILL. Look at this, decimated over the last couple of weeks. And this chart setup here, this is what we're going to be on the hunt for over the next couple of weeks. We jumped into this one in the chat room this morning at $1.50, ended up trading as high as $1.69 before the close, and we actually got a couple of scalps off on this one intraday. So, a 12% move intraday on this one. And again, look at the upside. This is a stock, and again, this is going to be a common theme. This is how we play these bottomed out stocks. Check out the 20-day exponential. That is the green line. This is going to be our ultimate objective on a lot of these stocks. We're going to have two targets. We're going to have the 20-day exponential, the green line, and the 8-day moving average, that's the red line. 8-day right now, $1.92, 20-day, $2.21. Now, we're not saying this one's going to go back to these levels of the next day. Granted, there may be some of these plays that we do play that actually do moves like that, but these are targets that, if the market does indeed go into recovery and bounce mode, these are the high-end upside objectives on these, just to give you an idea. And then support would be yesterday's lows. So HILL, this one dipped $1.55 and under. I would be looking to accumulate it over the next couple of days, again, depending on how the market acts and if we are able to hold the recent bottoms we saw. ALXA, biotechs, really bouncing back nicely today. Check this one out. Over the last week or so, down 40%. Again, 8-day moving average up there, 141. 20-day up at 153. As you can see, this is a stock that loves its 20-day exponential, especially when it goes above it and below it. It always works its way back to the 20-day exponential. Nice one here. I would be looking for at least a move back to 135, 140 plus. And again, that wouldn't even take us to our high-end objectives on this stock. And again, you can see similar chart to the one we just looked at. Here is another one, BIOD. Same story, hammered over the last 3-4 days. Nice bottoming action here. 8 days up at 154, 20-day 168. Here we are sitting at $1.20 at the bottoms. Very, very nice upside support. These drops here were traders going, oh shit, get me out, plunge time. Like pretty much the rest of the market, all those sellers are washed out. A lot of these plays, it won't take a whole lot to move them. Look what OXGN did today, and that's a piece of crap turd biotech stock. But this one ended up spiking 70% today just because it's pretty much washed out all the sellers over the last few days. So ALXA, BIOD, same theme. You're going to see this theme over the next few days. FCEL, nice bottomed out stock. Again, got flush with the rest of the market. 20-day is sitting up there at 127. We picked some of this one up in the chat room at $1.03, $1.04. First target, 120, 8-day moving average. It did get an initial spike on the open up to that level with the rally in the market. So this is a stock, and it popped into the close when the market really started to take off. And that's what we like to see. This stock moves with the market. Continued move on the market should see some nice upside on this one over the next couple of days. And you're playing this one right now. Stops at $1. Today's low. Sirius, we jumped into this one in the chat room today. $1.66, $1.67. Got a nice bounce back to its 200-day moving average. And again, same chart setup. 20-day exponentials up there at 203. 8-day 195. I would be adding this one on any dips to the 160s now with stops at that double bottom at 162. And, this is a stock, the news was all good in it. It got hammered with the market. These are the kind of plays we want to be playing. Here is another one, ALVR. These guys came out with earnings last week that were great. They posted a surprise net income, cash flow positive, sitting on a lot of cash, but it got caught up with a crappy market, and the stock ended up dropping 40%. Here it is, sitting on the bottoms, minimal downside, lots of cash, positive earnings, cash flow positive. 20-day exponential up there at 140, 8-day 133. This one around the 120 area. Great pickup on a market bounce slash rally over the next few days. Love the setup on this one. RSI deeply oversold, stochastics deeply oversold, and again, same chart. Splat with the market, fat rebound coming. You're going to see this chart, like I said, over and over the next few days on the market rally. ANDS. This stock, got pumped earlier in the week, was up there at $1, splat with the market. They came out with decent earnings yesterday. When it comes to small cap bios, all you really want to see is they've got cash and no bad news with their drugs. We got both of that with the earnings report yesterday. 20-day exponentials at 93. Great bounce back play, especially with biotech stocks on the move over the last few hours, and that should continue in the near term. You're going to start to see traders get their balls back and start buying back the stocks that they dumped over the last couple of days. So that's pretty much it for the video tonight. Definitely come into the chat room. A lot of these plays are going to be rapid fire. If you're still, you new guys, rookie traders, this is still a really volatile market. I mean, we were down 200 plus and then rallied 600 points off that low just in the last hour. So it's very volatile. Crazy things can happen. If you're still a little bit uncomfortable, don't worry, sit back. If this is indeed a bottom and we do see gold start to tank over the next few days, there are going to be lots of trading opportunities. So don't be in a hurry. A lot of these plays, we're just trying to catch some small gains off the bottom. And once we really start to see the motor higher, we can start to increase our position sizes, look to play a little bit larger. So positive signs today. Nice reversal in the market. We're not out of the woods yet, but, we've got a lot of traders. That greed is going to kick in really, really soon, especially for those sitting on high cash like we have been over the last month. We are possibly in store for a very nice market over the next couple of weeks. And just to put things in perspective, S&P yesterday dropped 666 points, or 6.66%. The March 2009 bottom, S&P ended at 666. So quite an interesting comparison there. 666 both times. Monster rally off the March 2009 lows. Perhaps we're going to see the same here again. Any questions, feel free to send me an email. Otherwise, I'll see you guys in the chat room tomorrow. Good night.